Yeah, in a word, strength. As everyone knows, I tend to be very verbose in describing, answering anything about a stock, but this is power. This is amazing. I would say for a mega cap company to just jump like that 8%. Look at that RS line blue dot. And one reason and so I think you could buy this, especially let's look at the 5 minute. Obviously, size your position correctly. You don't want to go too deep, especially given that we've already had two early buy points, which we'll talk about later. But look at that gap from the close going into earnings, 20 points. Shorts have to cover or at least reduce our short positions. I want to highlight that we have several investors' corners that highlight the strength of breakaway gaps on earnings in fundamentally strong companies in good markets that I hope everyone will read. A few of them I've been putting in the Q&A over the past couple days because we've had just a strong market. And this has been on leaderboard's watch list. We didn't add it because we were just, first of all, stuffed with a lot of tech, really stuffed like an 18-pound tom turkey already before this one really gave us a chance. Nonetheless, you draw that trend line from 238 across 228. We argue that there was a buy point at 215, and that's coming very close to that November 1st follow through. The second entry point was really kind of when it was getting close to 228.79. It really broke past that in earnest, obviously, on the gap up yesterday. And I think that gap up was caused by two other earnings gap ups that Ken Eagle Eye had duly noted in the news. That was NTAP, NTAP, and Workday, WDAY. So here are two more examples of how, okay, many of you might not have bought stocks on a breakaway gap. Maybe now's a time to try something, because even just a tiny little position, because it's very counterintuitive, but we're not buying willy-nilly in any kind of stock that's just going along for the ride. We're actually buying stocks that have that all the aspects of a true IBD stock type leader.
So where do you think CRM ranks when you compare it to a lot of the software stocks that have been performing well? And with that, how much of the portfolio would you dedicate to something like this if the intraday chart shapes up throughout the session as you would like?
Of course, it depends on how much tech exposure you have already. For instance, I wish I could buy this one but I'm probably not going to today. One is I have almost all of my IRA in ServiceNow, NOW. It's 85% of my my IRA is in ServiceNow, and I have a buy point.
Okay, O'Neill Jr.
Never. Oh man, was that a mic drop or what? My gosh, that's so funny. Love Bill O'Neill. Love Bill O'Neill, and so my entry point there was around 590, and then I added a little bit to it. I just had a lot of conviction in something like this because clearly everything was there, and also they have this strong relationship with NVIDIA, rolling out AI-driven software that will be only proprietary to them, given that NVIDIA is now creating what's called an AI foundry, allowing all enterprises to create their own AI and keep all of their intellectual property while working with NVIDIA engineers and whatnot. I'm sure, I haven't had a chance to read Salesforce's report and see what they're doing to transform their already incredible enterprise. And part of the reason they might have slowed down in terms of a stock is you can see that growth in not the earnings. Earnings has been exceptional, but it's just the sales. And part of it could be the sort of not only tough competition, but the law of large numbers. You got a company here is $250 billion. It's no Microsoft yet, but that market cap is equal to dozens of other enterprise software names. So for that reason, I decided I really like ServiceNow more. I decided to go with ServiceNow, and I think it's the same. I think a lot of people are in the same boat.